Hi.
Hey,
How's it going? Are you are you sipping on your wine there in Switzerland?
Now I have champagne. Now champagne. It's 6:30.
Champagne. Wow.
Yeah.
Good for
Busy
you.
week. Busy week.
What what
what
time is
day?
it there? Is it about
Yeah.
7 o'clock? 6:30?
It's half past 6.
Okay. There's Bob.
How we doing?
Good. Big bad Bill. I can see his staircase. There's the boat guy. There he is. How's everyone doing?
Good. How you
Good.
doing, Mark?
I am doing okay.
When you
Jan's,
heading to Florida?
we're thinking about this summer. The place I usually stay is still rebuilding from the two hurricanes that went up the coast. But they're supposed to reopen in March. But we'll see. And I may go down and see Trent then, but we got to wait for the snow to melt because he's had more snow than I have.
Does he give you free lodging?
I don't know. We have to negotiate that.
That should be part of your package, Mark.
Well, he's got enough Airbnbs around him that are empty. We could probably work a pretty good deal.
I got four houses that are empty around me right now.
Yeah, we'll just open one of those up and I'll just stay there. So
There you go.
Interesting.
Yeah.
I'm gonna get going because I got a lot of stuff. A lot of stuff happened this week. So,
But the economy is doing fabulous, right?
well, we're gonna talk about that. So that's why I want to get going, and I'm really interested in everyone's ideas and comments. So, I'm going to talk a little bit. My main theme today is going to be are the Mag 7 companies spending like drunken sailors when it comes to AI, and then I want to talk about to Doge or not to Doge. But first, I want to go over a little bit of economic news, and because things are so fast, with this administration, it's you can't even keep up. By the time you read one news story, there's another one out there. So you think about, a week ago we were talking about DeepSeek, and that dumped the market on Monday, and then last weekend, I'm almost afraid, what this weekend's going to bring. We got Super Bowl, but who knows what news is going to come out. So last weekend, President Trump came out and he imposed tariffs 25% on imports from Mexico and Canada, and 10% on China, which he said may cause short-term pain for Americans. The president said he would talk on Monday with the leaders of Canada and Mexico, which had announced retaliatory tariffs, but downplayed expectations they would change his mind. Okay. So Monday, markets open. It looked like the Monday before. Shares of automakers, mega caps, tech stocks, they bore the brunt of the wider equity pullback on Monday while investors flocked to the dollar and U.S. Treasuries. Of course, all the big banks got involved. Goldman Sachs noted that if the tariffs are sustained, again, this is a Monday morning. It just opened up. It could reduce their S&P 500 earnings per share growth forecast by 2 to 3%, while Morgan Stanley also expects U.S. equities to come under pressure. And then, you heard the president of Mexico and the premier of Canada. They got secondary and third and fourth-dairy plans, and they're gonna retaliate on their tariffs on us, and Canada's going to retaliate and take all the American liquor off the shelves, and throw it in the garbage. That was all within, the first 3 hours of opening. And then Trump, and the market went down, and then Trump gets on the phone and he calls the president of Mexico. And then all of a sudden we get a story out. It says in the morning, Mexico's President Sheinbaum said that after having a good conversation with Trump, Mexico is pausing tariffs for a month for now, and Mexico will promptly comply with Trump asked by reinforcing the northern border with 10,000 National Guard members to prevent drug trafficking from Mexico to the U.S., particularly fentanyl. Then, in the afternoon, President Trump announced Monday that proposed U.S. tariffs on Canadian goods have been paused for 30 days, citing efforts by Canadian leaders to secure the border. This happened in the afternoon. The announcement followed an afternoon call between Trump and Canadian Prime Minister Justin Trudeau. Trump had threatened 25% tariffs on all Canadian goods beginning this week unless the country did more to stop the flow of unauthorized migrants and fentanyl into the U.S. And when you look at what the GDP of Canada is compared to the U.S. is like 32 billion, and I think Canada is like 3 billion. I mean, so they would have got crushed. I mean, they send 75% of their exports come to the United States. So even threatening back was interesting. But anyway, they solved all that. And so that was within a day, and then the markets came back. Okay. And then China, they didn't solve anything yet, but it was only 10%. But when they came back, they announced on Tuesday that they'll impose a 15% tariff on US coal and liquefied natural gas and 10% tariffs on crude oil, agricultural machinery, large displacement vehicles, and pickup trucks. The measures are set to take effect February 10th. China's Commerce Ministry also announced that starting Tuesday, the country will implement export controls on tungsten, tellurium, bismuth, molybdenum, iridium products. In addition, China said it will launch an antitrust probe into Google. Then on Tuesday, President Trump signed an executive action, said he would direct an official to create a sovereign wealth fund for the U.S. following on an idea he floated during the presidential campaign. So that was in the middle of all this kind of tariff with China. So if you look at what China actually did, they didn't really do much because the U.S. is a relatively small source of crude oil for China, only 1.7% of the imports last year, worth about $6 billion. And just over 5% of China's liquid natural gas imports come from the U.S. So what they're sanctioning on us really was kind of it was a stab back, but I think they're just playing with each other, and we'll probably end up getting an agreement somehow, with China. It's all about fentanyl. Other things that's happened. And again, this is just a whirlwind within the first 2 or 3 days this week. Marco Rubio went down to Panama, and then they were, showing their swords back and forth that we're not going to give up the Panama Canal, and you guys don't know what you're doing. We're not going to cooperate with you guys. And he came back and he negotiated a deal with Panama that would grant the U.S. the right to pass through the waterways, Navy ships, without being charged fees. The move, the state said, will save the U.S. government millions of dollars a year. So things are just moving quickly.
They were charging us $1 million to bring a warship through.
Yeah, I know. I mean, so if you look at what's happening in the 18 days now, and the market doesn't know what to do. It's up, it's down, it's minute by minute. And I don't know. I'm exhausted in 18 days, and I can't even imagine another 3 3/4 year of this, but it's going to be interesting. So anyone else have anything to say on kind of the whirlwind of what's happening? I mean, I'm going to get into Doge here in a second.
The Democrats are ambushing the education department. They want to get Musk out.
It's interesting to me, and I'm going to talk a little bit here, but why are people so upset?
Because
it's just looking at where the money's going.
Yeah, it's obvious why, right? It's affecting their kickbacks to their re-election funds that they pull money out of and things like that. Come on.
Well, let's talk about that. I named this segment to Doge or not to Doge. Okay. Doge is the Department of Government Efficiency. Okay. It's run by Elon Musk, and Elon Musk had campaigned with Trump, and they've talked about this forever. So it's not like, shouldn't be any surprise that they're doing what they say they're doing, because they are. So Doge began its review. So Department of Government Efficiency is out of the White House. Okay. And he has a team of younger kids, I guess, and engineers who are pretty well, pretty good at what they do, from what I understand. And they're sleeping in the buildings. Too. Yeah, they're sleeping in the buildings, and they're working 120 hours a week or whatever. Yeah. So they began their review of government waste and fraud and abuse, starting with the USAID. And most people probably until this week never even heard of this organization. It's a non-governmental organization, but they have a lot of money that gets funneled into them from the United States. Okay, so they're not an agency per se, but there's several of these non-governmental organizations where the United States gives them money, and they're supposed to allocate this money according to however we're supposed to allocate it. Okay, so after finding questionable payments, the NGO was shut down, with operations transferred to the State Department under Marco Rubio. So the U.S. Agency for International Development, USAID, underwrote such worthy projects as pottery classes in Morocco, bat research on coronaviruses at China's infamous Wuhan Institute of Virology, $20 million to create a Sesame Street in Iraq, 1.5 million to
Yeah,
advance.
I mean, think about that.
Yeah,
I mean,
I know. 20 million. 1.5 million to advance diversity, equity, and inclusion in Serbia's workplace.
why
and
can't we
business-
give that money to our veterans or, you know,
I
for our
hear
own
you.
country, you know, to help our own people?
4.5 million to combat misinformation in Kazakhstan. 1.5 million for art for inclusion of people with disabilities in Belarus. 8.3 million for equity and inclusion in education in Nepal. Okay. 2 million for sex changes in Guatemala. 8 million for subsidizing subscriptions to Political, and the list goes on and on. So, and
That
we're
was to
laughing
give
at it, but
misinformation, though. That
this
was
is
Political
this
was
is
to give him misinformation,
yeah.
you
Well,
know, on Trump and everything.
well, and they're finding now they've also subsidized the New York Times. They also
Yeah.
subsidized the BBC. So, you know, the interesting thing is, you know, how are they finding this information so fast? And so the Doge team is actually using AI software access through Microsoft's cloud computing service Azure to pour through every dollar of money the department disperses, from contracts to grants to work trip expenses. I would be upset if I were on the other end and knowing that when the dollar trail goes, it ends up around me or me. You know, that's why I think we're seeing a lot of people very upset about this. So now, you know, Doge turns their attention to the Department of Education, like Bob said, Department of Transportation, and the DHS. Okay. Why is this important to us? Well, the U.S. is $36.5 trillion in debt. That's $323,000 per taxpayer. The interest on our debt's over $1 trillion. Total U.S. debt, including household, business, state and local government, financial institutions, and the federal government, is over 100 trillion. Student loan debt is 1.7 trillion. Credit card debt is 1.35 trillion in the United States. Our Social Security liability is 28 trillion, Medicare liability 43 trillion, leaving the U.S. with 226 trillion in unfunded liabilities. Let's talk about the money supply and what this government has done. In 2000, the M2 money supply was 4.6 trillion. What do you think it is today? 21.7 trillion. So this is the basis of the debasement of our dollar, and all our wealth is being sucked away in the dollar. So it would cost you in today's money $172 to buy the same amount of products, groceries, or whatever that you would have in 2000. Okay, so 72 more dollars. When we look at currency and credit derivatives, okay, they were $88 trillion in 2000. Remember the credit derivatives. Now 723 trillion. Remember those credit default swaps from the great financial crisis? Well, they're back.
Oh, they've been back. Yeah.
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 So how
strong too.
No kidding. So how about the workforce? Okay, so
how about the workforce?
The total population of the U.S. is 340 million. In 2000, the U.S. workforce totaled 162.8 million. Today, it's only 161.7 million. We've gone down in 25 years. And of those, 27 million are part-time. So we have less people paying for more spending. 37 million U.S. citizens are living in poverty. 27 million have no insurance. 700,000 U.S. citizens are homeless. We have 42 million in food stamp recipients. So for me, you know, I can't vouch for the validity of the spending debacle that Doge has found yet, but it'll all come out. I do know that we have people in North Carolina still living in tents because of a hurricane. There are veterans living in the streets of the U.S., and a lot of U.S. citizens have lost their homes to fire in California. For me, I think these should be the priorities of the U.S. government before we subsidize subscriptions for Politico within the U.S. bureaucracy to the tune of $8 million. So we have a spending problem. And so let's at least have a discussion of where our tax dollars are going and where we want them to go and prioritize them. You know, with Trump, we're in a different world. You know, we can see so many major policy moves in a single day. And with a market that's been used to maybe one report a month from the administration, this will certainly add additional daily volatility into the mix seen within the charts. So that's my rant on Doge. You guys open up. What do you think?
I'm sort of blown away at where all this money is going. And I'm like, how does this happen? Like they just write this into a 15,000 page bill and it gets buried and that's how it gets funded?
Yeah,
I mean,
I guess my
it's
question is, why do we elect senators? Why do we elect representatives? Aren't these guys, shouldn't they be going through budgets? I don't think we've had budgets for probably 5 or 6 years. This
Longer
is
than
the
that.
Budget.
problem.
What's a budget? Come
What's a
on.
budget? Nobody understands what a budget is. What a bunch of assholes, excuse me. But it really ticks me off.
yeah.
And I live in a state that is full deep in it. I just don't understand. Why do we pay for these people? What good are they doing?
Well, I guess my question is why aren't we calling them out publicly? Why aren't
Exactly.
we
Why
like,
aren't we?
why isn't it becoming these guys are being put on public notice? You know, like, hey,
Well,
we see you. Now you need to answer for this,
but
you know?
Doge is supposed to come up with a website that this stuff or these bills they're going to be passing um, is posted.
Yeah, they need to do that so people can see.
Uh, Mark, did you really have to do this to us?
Well, yes, I did.
I
You
mean,
know, because we're ticking off, the clock's ticking off because we can't keep spending like this, you know? And it'll affect, eventually it's going to affect the markets. It's going to affect everything. It's going to affect the credit market. It's going to affect stock market. It's going to affect land values. It's going to affect everything. And so, yeah, I
yeah,
think now is a good time, you know, and a perfect time with what Doge is doing to look at this stuff. I mean, amazing. You know, this is the U.S. drug or not drug debt clock. So it's debtclock.org, and you can go see all the information I just went over, and it's really amazing. It's actually depressing when you look at it of how it just keeps moving. And you know, here's our national debt, 36 trillion. But if you look at all our U.S. unfunded liabilities, 226 trillion. Medicare liability, Social Security liability, $665,000 of liability owed per citizen. Okay. It's pretty amazing because you have 340 million people, but only 112 million taxpayers. Okay. And here's where you got, you know, in 2000, our median income was 31,000 and now it's 43,000. Income has not gone up. Okay. A house in 2000 was 161,000. Now it's 421,000. Car in 2000, 22,000. Now it's almost 50,000. I mean, it's an amazing thing to look at, and there's so much information on here. It's just amazing. So anyway, I think it is pertinent to our discussions because it will affect eventually. It'll affect, you know, the markets. It's going to affect how we live. It's going to affect your children, your grandchildren. Trent?
Yeah, I mean, I think it's inevitable. I mean, you look at how fast we're going, how fast we have been going into that. It's refreshing to see them go through line by line and analyze what we're spending money on. My question is, can they do it fast enough so we can start to offset this? And number two, I started thinking about tariffs, and you know, he's slapping tariffs on Canada, Mexico, China. Uh, and I had this discussion with my sister-in-law who runs the accounting for a manufacturing company, and they're now having to tell their Canadian offices, do not buy anything from the United States. Make sure you buy your boxes, buy everything out of Canada because we're going to get slapped with an additional 25% expense to this. And she said, we don't see it as a big problem yet, but anything that we cross the border, you know, out of the United States or in the United States, we're going to get hit. So my question is, they raise these tariffs on everybody. Let's say they hit Europe with them as well. That increases our expenses. Are they going to counter that with reducing our federal income tax? So I believe the average federal income tax in the United States per household is 22.5%. Does that mean they're going to say, hey, okay, we're going to reduce that expense to you, US citizen household, by 25%? That way we counter that expense that's being passed on to you because of these tariffs. And psychologically, that puts more money in my pocket, which means I'm going to have more money to go out and spend in the economy, hopefully bolstering the economy. Is that what's going to happen here? Is that no? Okay.
I don't think so. I don't think there are going to be any tariffs. I think between at least Canada and Mexico, that's going to be worked out. Okay, maybe Europe will, fight us. China, we're not really tariffing them too much yet. So I think it's a negotiation ploy. And look what he's got. He got negotiated from Panama, Venezuela, Colombia. I mean, just the threat of it brings down. But so I don't think we're gonna see it. And when you think of Canada, okay, yeah, we're gonna buy our boxes here, but it's their exports. 3/4 of Canada's exports of their $3 trillion economy come to the U.S. So they're gonna get hurt,
Right.
And I don't know what I buy from Canada myself personally. I don't know. Go ahead, Bob.
I don't buy anything from Canada. And I don't ship a lot to Canada. So there's really zero effect. And when they say, we're not going to sell the US our whiskey, or, we're going to put tariffs on their whiskey, go ahead. I don't know anybody that really drinks your whiskey, to be very honest with you. I'll tell you what we do import a lot of from Canada, and that's lumber.
Yeah.
They are a major supplier to the U.S.
You talk about negotiations, a negotiation ploy, the tariffs. I understand that. But President Trump has already publicly admitted what his goal is to get rid of federal income tax, and that everything will be subsidized by tariffs.
Is that just
I don't think that's
words, or
enough.
is that really?
I think kind of tagging on to that, Bob. His idea is, look, even if the way we look at it today, it's not fair. We are being charged, like you said, we can't do banking in Canada. Okay, and they can do banking here. We can't sell cars in Europe, but they can sell a bunch of cars here. He wants to make it an even playing field. So if your tariffs on us on cars are 45%, then that's what they're going to be on for you. And he's trying to just make the balance sheet even, liabilities and assets, so that whether you're Pakistan or you're Germany or you're Kenya, if you have tariffs on us, we're going to put the same tariffs on you, I think, is the end goal.
Yeah.
I hate to say it, but it goes back 15, 20 years when we negotiated NAFTA and all these trade agreements. This was horrible. I saw the exportation of American jobs overseas when I headed up supply chain management for a large manufacturing company. It was horrible. And this is the price that we pay. And now we're trying to get the equation straightened out. And by the way,
Ross Perot?
I think the other question that you brought up, which I think is pretty interesting. How do you turn this around on a dime? I'm talking about all this junk that we're finding in USAID. How do we get rid of all this stuff and turn it around? And we've got to start reducing the debt, because otherwise the boys are going to come and repossess the country.
You don't.
I think
there's no way to do that. This is a big machine, man. This thing's picked up speed, seven plus trillion speed behind it. It's got all this weight.
Oh, I know.
It's barreling down the road. There's no way you turn that quickly. Unless you turn on the printing presses somehow and get that money down to zero. I don't know how you do that. China's not going to lend us any more money. Canada's I don't think they have the money to lend. Where are you going to get the money from, Bob?
I don't know. I don't have a clue.
Right.
And I think
Oh,
that's,
well, I guess we could sell assets. We could sell assets.
Well,
Well,
they
it's-
have those assets, and that's what Doge is recommending. Start clearing out 203,000 acres and buildings that they have on the books that they're not even using. They lay empty.
cancel leases, yeah.
Yeah, I mean,
And I also think drill, baby, drill. In
Yeah.
other words, he's also going to count on us just drilling and coming up with oil and gas and selling overseas and using part of that money for paying down this debt. I don't
That
know
started.
how else you're going to do it. And
that started already, Bob. Um, I saw tankers that have been mothballed because of the Biden administration preventing them all from drilling, heading to Alaska because he freed that up for them to start leasing and start drilling there. The tankers are there already. They're extracting oil from existing wells.
Mhm.
So that process has started. And that's going to take 3, 6 months for that to start to make any type of dent in the economy. But not to twist in another direction. Did you guys see the job numbers today?
Yeah.
The revision to December?
Yeah.
I mean, the other thing I can't understand is the increases in pay. I mean, that's like they estimated 0.3%. It's 0.5%. I
I
mean,
don't think, I don't think they know what the hell they're doing. Those reports are almost laughable, Bob, to me anymore.
I don't take them as Bible, Mark.
I mean, you couldn't run,
They are
I think you guys
benchmark,
need to go
you
back
know?
and read the
You couldn't
mission
run your
statement for
business,
this
Bob.
channel.
you couldn't run your business, Bob, by having reports like your monthly sales report. Say, oh, look, I made 12 million last month. Oh, then your accountant comes in. Oh, next month and goes, oh, I revised that down. You actually lost 12 million.
Yeah, right. I'd be out of business.
Sorry, Trent. Sorry, Trent.
No. I was. We've always been saying about the reports coming out of Washington is just bunk. As yeah,
They're not
So-
real numbers. I mean, if you
They're
want to
just
follow any
ink
numbers,
on paper.
follow the ADP numbers, you know?
Yeah. Have we,
Eric's got a question there.
okay,
Hey.
Eric. How's it going,
Hey,
Eric?
Hey, happy Friday.
Yeah, you
Happy
too.
Friday.
Hey, so so I'm I'm an artistic person. I went to school for art, and I'm very right-brained. So all of this economy stuff and everything related to like the markets and everything like that. I mean, I didn't really start learning about until about 2 years ago, and then even in the last year more with hanging out with you guys. And it's really I mean, okay, so with all this debt, I mean, from my understanding, like this debt is never going to get paid off. It's not what the whole system is based on, being that it's a debt-based system. And it's not like when the American government runs up their debt and deficit, it's not like a household credit card debt, where you got to pay that off. Their debt is created at the time that people are asking for money, so they create the money to loan to people to start businesses, and then the government is putting their trust in those people that they're going to go out and grind and be little middle class worker bees and pay that debt off with their time, because they're going to earn a return on that on that loan. So that being said, I mean, my opinion is that that's not going to keep happening, because people are not going to keep going out and expect to work a middle class job and then go to the grocery store and not even be able to afford their food. So people are just going to stop, and if people stop working, then the government stops getting taxes, which is another main source of their revenue. Where it's either created from loans or it's generated by taxing the money that the little worker bees are going out and doing. So if people stop, then the government isn't collecting taxes. I mean, at what point do things tip and become fully automated, fully robotic? And then at that point, I've been looking a lot into this late stage capitalism, which is what we're pretty much in now. And if you don't believe that, some of the pillars of the late stage capitalism are, oligarchs that really rich people that own, the top three guys owning, half the country's wealth, and then,
More than
I forgot where I was going with that, but
So how do we turn? How do
so
we
some
prevent
pillars,
that
the
from
pillars of the
happening?
late stage capitalism are that eventually capitalism is going to become obsolete, and if the government's not turning a profit in taxes, the worker bees aren't producing, those top three oligarchs with the artificial intelligence and robotics are then going to run everything. And if capitalism does become obsolete, then my opinion is the next stage would be a depression until they figure all this out and figure out how to get people paid, or people start farming in their backyards, or what are they going to do? I mean, so after people get out of this depression, though, it's going to go, into my opinion, into a time of what would be known as a post-scarcity society, and that would rely, that would basically mean the supply surpasses the demand at any given point in time for any product, and that's all going to revolve around, with all this automation and robotics coming in. It's going to revolve around basically either the top, three companies that run the world and have all the money take over the government and make things more efficient, and then they figure out a way to basically put out some type of UBI where people that aren't working are still having a base, monetary value put on them in order to, just stay afloat. And then they can do what they want with that money. Back when in 2016, when Andrew Yang, or 2020, when Andrew Yang was running, his big UBI principle was that $1,200 a month for every American once they're 18, and then until they die, because that's what the country can afford. So, going towards that type of model is, what I can see happening, and it's all going to revolve around the government figuring out how to get people paid that aren't doing anything, and then 3D printing, because we'll be able to.
You don't sound like an art student to me, Eric. You sound like a better economics professor than I ever had in my life.
Well, like I said, I've been learning a lot these last couple of years. So yeah, just wondering your guys' thoughts on all that.
So I'm going to dust off my economics degree from 40 some years ago, and we used to have what we called recessions. Okay, and what a recession did is it kind of cleared the slate. It let the companies that weren't doing well go bankrupt and restart over. It let banks go bankrupt and restart over. Let people do that and restart over, and it cleared the clock per se. But at some point, probably around the great financial crisis, we decided that we're never going to have another recession again, and so we're going to control that. This is my opinion only, okay? And you guys are welcome to just dismiss me on it. We decided to use
Get out.
interest rates to keep the economy going. So we had free money. Okay, so corporations went out and overborrowed. People went out and overborrowed. Well, then during the crisis, for the pandemic, we started printing more money. We shut the economy down. People didn't have jobs and incomes, and so we printed more money on top of that, and then had to raise the interest rates because inflation went up. And so we're still saying we're not in a recession. We're trying to avoid a recession. But to me, recessions were the cleansing. They reset us back to close to zero, and everyone could start over again. But if we don't do that, that's a natural part of economics. Okay, it's called the business cycle. You go up and down, and the economy is that way. And we have been just doing up and up basically since the great financial crisis. So unless we allow this thing to deflate on its own, which is going to be a big one, in my opinion, we're gonna continue to build these bubbles. That's my opinion. Now, anyone else? Bob, anyone?
Yeah, but what you're saying is that we're not going to have a recession. I believe the cleansing has to happen. It is in the process. It is in the process, but it's not. It's just not deep.
Well,
I was on the phone today. Here's an interesting conversation. I was on the phone today with UPS today, and my sales guy. And I was talking to him about accounts and talking to him about, what they're seeing, or what he's seeing as, the local sales guy through New Jersey. And the feedback was that many accounts are going on credit hold and they can't make the payments on the accounts. Um, he's also telling me that there is no real new business coming to the area at this time. He goes, most are struggling to get their accounts up to date. And I will tell you that I think I've told you in other meetings that I'm seeing that also on my side. The accounts that used to be within 30 to 45 days have now gone to 60 to 90 days. So um, it's really not as good as everybody thinks it is. But what I don't understand about this particular economy right now, and I think AI, this whole AI thing and chips is what's keeping our economy afloat, that people are making money in the stock market, and that's filling their gap if they're smart enough to know how to do it, right? If they don't have the knowledge, uh, and they don't seek that knowledge and they lose, they're falling on their face, is what's happening. So, but the impact isn't like the Great Recession, Mark, that I see.
Not
Um,
yet.
I went through that, and I know that was a lot different um, scenario. So the picture is different, and I don't know what keeps this market up, and I don't understand the job numbers. I don't understand the wages. It's all, it's all,
Smoke and mirrors.
yeah, I just don't understand it.
Well,
But
if I made a bunch of money on Fartcoin, I would definitely cash that out and then find a place in the market to put it that's more reliable. And you got another example of late stage capitalism is that people are spending money and making money off of something like a Fartcoin.
exactly
Yeah.
my point, right? Mark, this is my point, right? Artist, he's figuring it out. He's figuring out
Yes,
how to
sir.
make a gap,
See,
right?
it's
I'm
like I
just
said. I
saying,
mean,
I'm
I
not
am an
saying
artist,
this.
and that's because and so since I've never fit into the machine, I've never been a part of I've never been one of the cogs, out there turning and grinding for the government. I never really understood how it works before, but yeah,
But
now that
you're
I've got some
learning,
knowledge
right?
and some perspective, that's kind of my creative outlook on things.
Right, and that's phenomenal. But that's what I'm telling you, is that a lot of people are learning this gig and learn how to play it. But what happens really? This is I, I've been waiting for the day, and I don't want this to happen to anybody, but the day's going to come. It's pretty easy to make money in the market right now, and it's been easy. But as Mark knows, and also Trent knows, the market can be really hard to make money, and it's hard to find those gains that you get today. And that's when I feel that the retail market will struggle and things will fall apart. But I think that
Think
they're all making, even my neighbors are doing it, and they're making money in the market to make up the gap.
I think you can see they always, when I was in the financial advisory business, they said the retail investor is always late to the party. And I think you've seen that over the last 2 weeks, where there has been an enormous amount of retail money come into this market, much more than has in the past. And they're all going to, the Mag 7 because they see they pulled back a little, that kind of thing. And I guess when I look at this, I remember back in 05, 06, how aggressive clients would get when it came to, getting a new home from a
Uh,
commercial point. And
you're
then
freezing
as am I freezing?
a little bit.
As '07 rolled around, all of a sudden they were caught holding the bag. And a lot of them took it on the chin. I guess that's where I look at this market and I go, I'm seeing more news headlines that say the retail investors putting money to work, which tells me historically we're at the top. You know, let them show up. This is when you start to preserve capital. Yeah, I just, and I think the institution who backs a lot of the movement in stocks to go higher has backed off, and they are repositioning to take advantage of the sell side. And I think more and more, you know, the 20, you know, the 10 to 30% retracement is building more and more. It's just, what is that event that lights this
I
candle?
think
You know what I mean?
I can't disagree with you on that. I think you kind of went right into where I want to go next, and that's um, you know, now for the drunken sailors of AI, you know, and if you look at what's been pushing this market since Chat GTP came out in October of whatever 2 years ago, has been, you know, the Mag 7, the Mag 8, the top 10, and the S&P. And I'm starting to see a little bit of chinks in the armor here. So let's go through, because we had a lot of earnings report from these guys this week and last week. So what started all this, Trent? Remember last week, DeepSeek, you know, that 1-year-old startup revealed a different capability. It presented a Chat GTP-like AI model called R1, which has all the familiar abilities operating at a fraction of the cost of OpenAI's, Google's, or Meta's popular AI models. The company said it spent just 5.6 million training its newest AI model, compared with the hundreds of millions or billions of dollars U.S. companies spend on their AI technologies. Now, whether this is true or not, I don't know, but it's out there. Okay. For Wall Street analysts, the developments raise serious questions about elevated valuations of AI-related stocks. And this is the key. These stocks, you know, the Mag 7s are very elevated. They're very pricey, okay? And they get that priciness for the trade-off that in the future, people are going to get their money back in tons. It's going to pay back way more than they're investing in it. So this potentially groundbreaking open source technology has called into question the gargantuan AI investments made by American companies. The Magnificent Seven is a group comprising Wall Street's biggest companies by market cap, and they now account for a third of global market value, a third, compared with about a fifth 2 years ago. This means that the performance of the S&P 500 is increasingly tied to the performance of these Mag 7 companies. The Mag 7's combined market cap in the NASDAQ 100 is significantly higher than in the S&P. It hovers around 40 to 50%. This means that the NASDAQ's 100's Q's performance is even more closely tied to the fortune of these 7 companies. Just this week, AMD reported better than expected results on the top and bottom lines, but it also reported data center sales of 3.86 billion. That reflected 69% growth from a year ago, but fell short of the 4.14 billion in sales expected by the analysts. So when you're highly valued and you're way out there on valuation, you cannot have a bad earnings report. You cannot have a good earnings report. You need to have a stellar earnings report. And you can see what happened to AMD. They traded at a 52-week low and were on pace for their worst session since October. As we've been talking about this for a while, market momentum has been riding the coattails of Mag 7 stock for the past several years, as goes the Mag 7, as goes the market. So NVIDIA hasn't reported earnings yet. However, it's been hit by a double whammy of China's DeepSeek offering, apparently low-cost AI, and reports that Trump administration is weighing additional limits on the sale of the company chips to China. Many of the Mag 7 companies have now reported earnings, and what have we learned from these? So investors are looking to Microsoft and Meta to provide reassurance that they'll keep spending heavily on NVIDIA chips to power the future AI services, but they only got part of it. Microsoft beat expectations top and bottom lines. However, Microsoft executives said the growth of its spending on AI data centers would slow next year. Asia revenue growth slowed to 31%, below the 31.8 expected, and the slowest in a year. Okay, so if you remember, Trent and I were always talking, and he follows NVIDIA a lot. NVIDIA always comes out and they have these stellar revenue growths, but if you go back quarter by quarter, like Apple too, you're seeing the revenue growths are on a percentage basis are getting lower and lower and lower, okay? Instead of going the other way, higher and higher and higher. When we look at Google, Alphabet shares dropped about 7% in the pre-market trading on Wednesday as investors are disappointed by the company's slowing cloud growth and concerned about its hefty investment to build artificial intelligence infrastructure. Google's revenue from its cloud business increased 30% to 11.96 billion in the fourth quarter, less than the 35% in the third quarter. It was also slower than bigger rivals Microsoft's 31% in the quarter, but more than the 19% increase that cloud market leader Amazon is expected to post, which we'll talk about in a minute. Still, despite edging out Google, Microsoft's Azure cloud platform's growth was smaller than expected. Alphabet's ad business is grappling with fierce competition as advertisers increasingly flock to dynamic social media platforms such as Meta's Facebook, Instagram, and ByteDance's TikTok. Alphabet has been heavily investing in infrastructure to ensure AI research integrated into its products like search and cloud services, but it's planned to pump in $75 billion towards these efforts this year, was 29% higher than Wall Street's expectations of about $58 billion. Dan Coatsworth, an investment analyst at AJ Bell, said Alphabet is being punished for missing quarterly revenue expectations for the first time since February of 2023 and for heavily spending on AI-related projects. Investors expect flawless execution from the tech giant, yet weaker than expected cloud growth in cloud computing implies the AI craze isn't automatically turning into big bucks for infrastructure providers. Alphabet's Google operations have been king of the search world for several decades. The evolution of AI now threatens to knock Google off the top of the mountain, Coatsworth noted. According to Coatsworth, the $75 billion guidance for capital expenditure was equally worrying. Previously, large CapEx would have been taken as a positive sign that Alphabet was doing everything it could to capitalize on a hot AI trend. Now the reverse is true. This increase in CapEx by Google was probably why we saw NVIDIA go up for the last couple of days, because that's a lot of spending that's going to go to probably Google. Yeah. When you look at Meta beat Wall Street expectations for fourth quarter revenue but predicted sales in the current quarter may not meet forecasts, sending mixed signals about how it bets on privacy, artificial intelligence powered tools are paying off. Zuckerberg was more bullish, saying it was too early to judge that DeepSeek's advances mean that heavy capital spending on AI won't be necessary in the future, and valuing hundreds of billions of dollars worth of investment in the long term. However, the social media company talked up the use of its in-house chips, which it has developed with Broadcom, as potential replacements for some servers currently powered by graphic processing units made by NVIDIA. Apple's overall revenue rose 4% its first quarter, but it missed on Wall Street's iPhone sales expectations and saw sales in China decline 11.1%. Apple said it expected growth in the March quarter of low to mid single digits on an annual basis. The company also said it expected low double digits growth for its services division. Tesla for the fourth quarter, Tesla reported revenue of $25.7 billion, well short of the $27.2 billion expected by analysts and just up 2% from a year ago. For the full year, revenue rose 1% to $97.7 billion. Adjusted earnings per share came in at 73 cents, less than the 75 cents Wall Street analysts were forecasting. Operating income totaled $1.58 billion, down 23% from last year, while adjusted net income rose 3% to $2.6 billion. Tesla said its operating income was negatively impacted by costs associated with artificial intelligence and other R&D projects, as well as lower average selling prices for its current vehicles. Tesla said that it expects capital spending to surpass $11 billion this year and in the next 2 fiscal years. In October, the company had projected spending between $8 billion and $10 billion in 2026. Then Amazon came out, and Amazon stock tumbled in the after market hours yesterday after it missed on Q4 cloud revenue and also guided well below estimates. It was the company's guidelines that led to after hours drop in stock. That's because the company projected profit and revenue in the current quarter, both of which came in below Wall Street expectations. Net sales, here's their guidance, 151 billion to 155 billion, below the estimate of 158 billion. Operating income, 14 billion to 18 billion, below the estimate of 18.24 billion. If accurate, that would mean Q4 revenue will grow at the slowest pace since global financial crisis. NVIDIA will report later this month. So the news from DeepSeek threw kind of a wrench into the Mag 7 machine. Do these companies still need to spend so much on CapEx for AI, or is there a better way forward that is less capital intensive? With year-over-year declines in lofty revenue percentages, along with increasing costs, how long will investors keep paying for Mag 7 pricey evaluations. And how will this affect the indexes, as many Americans invest in the stock market via ETFs like SPY or Qs? If earnings expectations, these 7 stocks comprise over 30% of the S&P's market cap falter, can the rest of the 493 stocks in the index make up the difference? To do so, their earnings will need to go up significantly. Not all earnings are negative, but here's some results from yesterday morning. ARM Holdings dropped 4% after the chip tech provider slightly topped current quarter expectations, but said it would no longer meet the top end of its previous forecast. Qualcomm fell 4.8% after the chip designer executive said its lucrative patent licensing business would not see sales growth this year, following the expiration of an agreement with Huawei. Ford Motor lost 4.9% after the automaker forecast up to $5.5 billion in losses in its electric vehicle and software operations. Skyworks Solutions plunged 29% after Apple supplier forecast declines in revenue in its mobile segment and projected current quarter profits below estimates. So the moral of the story, and I'm looking at the charts, and we'll look at some charts in plenty of time to see that we have been going sideways on these Mag 7s, and now we're starting to see them slip. If that slips, it'll pull down the rest of the market, unless the rest of the market can come in with these revenues that are extraordinarily high. But we're seeing that we're not seeing these big revenue blow ups on these Mag 7s, and we're seeing their guidance starting to slip. So my view on it is it doesn't look as rosy as it did a year ago in these Mag 7s. That's my view. What say ye?
I agree. I don't see these Mag 7s. They've been, like you said, been riding sideways. They're not moving up. I mean, look at Palantir. I mean, that's like a rocket ship taking off. They made a deal with Tesla, and now this thing is shot up like $15-16 in 24 hours. What's it, 500 times? P.
Yeah. This is kind of what we've been talking about. I mean, this is Amazon's revenue growth. When you go out and you spend, and Bob knows this because he owns his own business, if you bring in good revenue and your net is good, you start using that to reinvest CapEx. Okay, and that'll affect, the more you spend on CapEx will affect your net. Okay. But this is their revenue growth percentage. And you can see going back June of 23, July, and then we start every quarter, you're seeing it go down. And here's what they're projecting. So this is what we're seeing. We're not seeing this anymore. We're seeing this. Okay. And that's what's going to get investors spooked on these Mag 7s because their valuations are so high.
But look at how much that's compressed.
Yeah, it has.
Right. So I knew Amazon. I told Trent the other day, I see Amazon as another Sears eventually.
Really?
Yeah, I do. It is the Sears model.
Well, let's look at
You lost for words there, Mark.
I'm gonna let's look at some charts. Let me do that. And I'll just show you, what I see technically. And
Like,
I'm sure you guys all see it too.
I don't know, Bob. They'll reinvent themselves, I think, and that's what they're all trying to do
Yeah, I
right
mean,
now.
Sears did that too. That's where Craftsman came from,
Yeah.
Well, you look at Amazon, it's their web services that make the money now, So as goes Amazon, I think.
Well, they weren't doing so well with that either.
I agree. Yeah, that's what we saw. This is the S&P. Okay, and it's been going sideways for 2 weeks now, just along the intermediate resistance level. There's really nothing there to have a catalyst to make it pop up. Like I showed a chart yesterday. Trent and I were talking about Philip Morris. Okay, had a catalyst to make it get past its green line of resistance. See, it was stuck too, Philip Morris. But then earnings came out, and the catalyst was earnings were way past what the expectations, and guidance was really high. I think it was on their smokeless product out there. But this is what it takes to get past these lines. You can see we had the same resistance until something came out. Now, had these earnings come out the opposite direction, we would have seen it probably go the other direction. And let's look at one of those. Like, that's not good. Let's look at Google. Okay. So Google's coming along. Boom, earnings come out. Look what happened. Okay, dropped it right down. You look at Google as a company, you got, I mean, this is for on a daily chart, which if you were swing trading, you'd be like, okay, I got bad oscillators all down here, all negative. I've got now today, we've been seeing support on the 50. Okay, but today we dropped down right to the Bollinger Band, and that's where we're at today. I mean, it doesn't look too good for Google right now. And this is after it's been kind of riding along, you know, this sideways pattern until earnings. And we just went over their earnings. NVIDIA has not had earnings yet. Okay, but when these companies come out and say we're still going to spend money, that started to bring NVIDIA up. Okay, so on a swing trade point of view, I've been waiting right here to see if the MACD was going to cross over, which it has not yet. And that's usually my confirmation. You see, you already have a crossover as a stochastic, where this potentially, you know, could be a good swing trade. For me, it's above the 9, it's above the 200 again. We'll see if it looked like it came back down to test the 200, went back up. We'll see how this closes out today. I'm not going to do anything on this, but again, it has some room to go. The oscillators are looking better than they did. But we had a fight with NVIDIA right around the 200. The 200 is a strong line of resistance or support, depending on what side you're on. As you can see, as it fell through, it came up, came back and tested it, went back up, fell below, and then went below. Now it came up. We're going to see if it comes back and test it and then come back up, or it goes back down. It could go either way as far as I'm concerned. Meta's had a nice run, but here we are right on the green line of resistance, you know, the intermediate resistance level. It's been a nice run up the Bollinger. But right now, until I see something, you see this purplish line, that's where the sell orders are, and that's where it hit today. And that's, we'll see. We've had a lot of sideways motion. What's the catalyst that'll get Meta to move any higher off this sideways motion? Apple. Apple's still above the 200, came down, kind of tested it. Now we're fighting up against the 9. We're seeing Bollinger Bands contract. We're going to have a sideways pattern. See all the oscillators are flat. The RSI is under 50. Got a stochastic that's crossing back over negative and really a flat MACD.
Sorry, guys, I got to drop.
All right, Bob.
See you
later.
later.
See you at 3. See you at 3, Bob.
All right, bye.
So we potentially, with what you're seeing with the Bollingers, probably sideways for a while. I mean, I'm not seeing these big rocket ship takeoffs like we used to after earnings.
Can Mark, can you look at ARM? They had earnings this week too. They and kind of held up surprisingly well.
Yeah, let me finish with these Mag 7s and we'll go to ARM. Tesla,
Thanks.
since earnings, just been following the Bollinger Band down. Oscillators look bad. Just a slow grind down for Tesla. Netflix kind of broke out. This used to be where there was a intermediate line of resistance. The chart took it away. So Netflix has, you know, been, since it took it away, been going up. You have some sell orders up here, some potential in Netflix, but again, it's riding pretty high. But Netflix has kind of bucked the trend. You know, I called Netflix the +1 of the Mag 7. And then Amazon, of course, Amazon had earnings, but Amazon hit the green line of resistance, you know, the intermediate resistance level, went sideways for waiting for earnings. Earnings came, dropped down. Now we see that the 20 is now providing some level of resistance. We'll see where it ends up. Seeing the oscillators are rolling over also. I think we looked at Google, so we'll go to ARM. ARM's kind of ran up against the resistance level. You can see the oscillator or the Bollinger Band, came up, hit it again. And again, today we're just kind of moving sideways, seeing a rollover a bit with arms down 2.1% right now. A little bit of a rollover, maybe a little bit of rollover, but still above the 9. But you got resistance here at 173.26. Let's see how the Qs are doing today. Qs are right there. Here's your intermediate resistance level. Here's where your sell orders are. If it gets past that, it doesn't get past the sell orders, comes back down, comes back up, hits, doesn't do it, hits, hit it again today. Again, we're seeing just kind of sideways and sloping sideways, no movement on the oscillators, and just a sideways kind of gone up, but we still can't get past this resistance level. We need some kind of a catalyst to do that. We'll look at the Dow. The Dow Jones, same thing. 1, 2, 3, 4, 5 hits. Starting to see the 9 roll over a bit. Okay, we're starting to see convergence of the Bollinger Bands. Again, doesn't really say I'm going to take off anytime soon to me. Let's look at the mags. Here's your mags. These are the mag 7. It's an ETF. Again, just sideways, right along resistance. We've got a lot of moving averages crunched in between that and the resistance level. And we've got Bollinger Bands that are parallel, moving sideways. At some point, this is going to pop one way or the other. And the way that I'm seeing the stochastic and maybe the MACD with less momentum, it's probably heading down, and that's what we're seeing here. We'll see if it goes down and touches off of Bollinger or not. So, I mean, I don't see that much from the mags, but there are. This is one I've been watching. Okay, it's been in the list. It's Berkshire, and Berkshire's kind of flattened out with the rest of the market today. You still have some pretty good oscillators. We were down a little bit today about where it opened yesterday. Here's where I put it on the list. Watch it. I mean, 9 will be support and resistance at the Bollinger, and you can see it's turned over a little bit on Berkshire. And the other thing we were looking at this week on the list was NU Holdings. This is a bank, mostly crypto type banks out of Brazil. Berkshire Hathaway actually owns a lot of this, but it came up. It was really nice. It was under the 200, rolled along the 9, got to the 2 above the 200, came back, retested it. We like that. Next day went up, and that's when I said, hey, you might want to look at this, and you can see where it's gone. A little bit of a rollover. Here's where your sells are, and here's where our resistance level is. So again, sells are at 1427, somewhere in that area. But again, it's a nice chart. So you don't see, there's not all bad charts out there, but it's hard to find them. When you do find them, you really got to watch and put your stops on. Does anyone else have anything they want to look at while I got the charts up? All right, you're gonna make me.
Can you also do the Palantir chart?
Yeah.
I think there's an enormous amount of complacency in the indexes and in the Mag 7 plus the other Palantir and Netflix. I think you're seeing an enormous amount of, oh, everything's wonderful again, or you're not seeing a lot of hedging. You're not seeing a lot of put buying behind those stocks, and they're actually, you can buy puts on a lot of these at a very big discount. So that tells me that nobody thinks this is going down, which is typically, if you look at it from a contrarian point of view, that is a sign of trouble.
Going down. Yeah.
Yeah.
This is Bitcoin, and we'll go to Palantir. This got into a traditional pattern of a sideways triangle. Okay. And you can see it hit highs, had lower highs, and you just kept bouncing past it. And we got down to it, broke under it, came back up, couldn't penetrate it again, right on the 9, right on the line. And then we just started following the 9 down. Now we're having resistance at the 50. day moving average for Bitcoin. We don't have very good oscillators yet, although, the stochastic looks like it might have a little life in it, but the momentum's down. So again, sideways, we're underneath the 9. We're having trouble getting past the 50 on Bitcoin. Palantir, look at Palantir. This has gone into momentum world, okay, which is what I say when we don't have an intermediate resistance line on the chart. The program took it off, okay, because there was so much momentum going up, it took that off. Now that's dangerous because you don't have an idea other than maybe the Bollinger Band or sell orders, which is what we hit today. It came up and hit where the sell orders were. And they are at 116.20 on the sell order. So we'll see if it can maintain that momentum. Had a nice gap up after earnings. We'll see if it maintains it. Got nice oscillators still. But again, this is a pretty good line of resistance. Is where people sell. Okay, the program gives that to us. Watch for the green line, the intermediate resistance to come in here, or we may just keep moving up. This is momentum stock now until we find some resistance at the top other than sell orders. What else do we got? This is the ETF for technology. Again, it's kind of been all over the place, technology right here, right along resistance again. Oscillators don't look too bad. Energy. Energy's been in a downtrend underneath the 200 now for several days, trying to get back over the 9. Oscillators don't look so good on energy right now. Anything else you guys want to look at?
Yeah. Did you look at Microsoft yet?
Probably not. Nope. Microsoft. Oh, what happened to Microsoft? Earnings. Boom. And then we got into this sideways pattern. The intermediate resistance level dropped down on Microsoft right here next to the intermediate support level. So we've been going sideways. It's actually gone up just a little bit, the intermediate resistance level, but for 2 days in a row, we've come up and hit it and dropped back down. I don't like this. You're seeing a downward lower Bollinger. You're seeing a bad MACD. The stochastic is in the dirt and the RSI momentum's in the dirt. So nothing to see on Microsoft from a swing trading point of view at this point. Let me go out and let's look at a monthly of Microsoft, see if it looks any better. Pull this back a little. On a monthly, okay, it's my box. This is your resistance level on a monthly. See, we've kind of popped over it a little bit, but we're just sideways even on a monthly. So today, it looks like we actually will get a full candle close if it remains that way below the resistance level again on the monthly. And on the monthly, we're seeing also the oscillators not look so good.
Mark,
And,
could we look at financials, please?
yep. Me even on the weekly on Microsoft. Yeah, the weekly. On the weekly, actually, we're going to close under. We're seeing the Bollinger kind of moving down. You're seeing all the oscillators even on the weekly. We're going to close below where the support actually was. So you wanted financials, you said?
Yes.
Okay. Back to the daily. We'll do this. XLF. Okay. Where did it go? Financials. Look at that. So here's your resistance level. You've come up here once, come back down. We actually got under the 50 day, under the 9. Had a nice run up. Look what we hit. We hit the resistance level. We're hit, came back down. We're back up on the between the resistance and where sell orders are located. get this a little closer. And we're just kind of, again, this intermediate resistance level is just hard to get by unless you have some kind of catalyst to push you one way or the other. And for 2 days, we've just gone between resistance and where on the financials, 52.17 is where the sell orders are, and resistance levels at 51.99. If we go in, we can look at JPM's a big one, JP Morgan. Okay. JP Morgan doesn't have an intermediate resistance level, but for 2 days, it's hit the sell where the sell orders are. Again, would have been a nice trade. We had a trade right at this point, and you could have stayed in this one. Goldman Sachs looks like the JP Morgan chart. Again, made some plays on it there. Morgan Stanley. Morgan Stanley actually has a resistance line in. You see it came up, it's hit it twice now. Kind of seeing parallel moving averages along with the resistance. We're seeing the Bollingers kind of converge, have a little bit of a nice trek on the stochastic, but flat MACDs. Again, it looks like it's going to be flat for a bit unless we see some kind of a catalyst come in there. Here's Citi. Citi's hit intermediate resistance level several times. And again, it might pop up, hit the sell order resistance level, but again, sideways pattern on Citi.
Hey, Mark.
Yep.
I got a question for you on
Sure.
this Fidelity. I've never understood. If you go down at the bottom where it says ticker, and we see Dow, we see NASDAQ, we see
Yep.
S&P 500. What I
Yep.
don't understand on advances declining, obviously you can see New York Stock Exchange, you see NASDAQ, but where do you see S&P 500?
Let's see if we can.
I mean, I've looked there and maybe I haven't been looking right.
I don't see it. Right here is all I can see, but I don't see advanced decline on it.
You know, if you go over to ticker, way over to the left, bottom,
Yeah. Yep.
and you bring that up, that's the only way I see of being able to get, and I have not been able to find that. I just think it's sort of weird that it'll show two NASDAQs.
Yeah.
I don't understand that.
Probably the NASDAQ 100 and then the regular NASDAQ too, you know. So, yeah.
Are you saying that the S&P 500 is part of NASDAQ?
Well, it'd be part of the New York Stock Exchange for sure.
Oh, all right. So that's part of the New York Stock Exchange.
Yeah.
All right. So
You can
maybe
see
that's-
today we're down 70% down there, and the NASDAQ's about 70% down.
Hey, the other thing is when you were reading, you were talking about the Mag 7, and I didn't know, did you say 1/3 or 2/3 of the world's market cap?
Of Mag 7, like it's almost 50% of the NASDAQ 100, and it's probably 35% of the S&P.
Yep.
By market cap.
I don't know. That was the terminology that you said. You were reading it off, I believe, an affidavit, and that's why I was just wondering.
Yeah.
It sounded like global. The world.
Yeah, globally, yeah. Hold on. Let me go back. While I'm looking this up, Trent, do you have anything more?
No, I use sort of I look heavily at the options market
You
and
do.
a lot. And what I'm seeing is that there's really not a lot of support, especially in the top 10 holdings in the S&P and the NASDAQ. There's not a floor. There's not a worrisome attitude towards them. And so that people are less protecting or hedging their positions, which historically, when you see a lot of people are willing to pay a premium for protection, it pushes stocks higher. And the only ones I'm seeing that have some level of a premium is Meta and Tesla right now. And I think that can translate into the ranges that they're in, whereas Apple, Microsoft, Nvidia, Google, Palantir, Netflix are all
Hey Siri.
people aren't willing to pay a premium to protect their positions at this point. And to me, from a contrarian point of view, that's a sign that the floor easily can drop out from under these things. If as long as there's there has to be a catalyst, there has to be an event that lights this thing up. And I don't know what it is other than NVIDIA earnings. And from what I have calculated and the rate of change I've seen quarterly, year over year, over the last 12 months in NVIDIA, their revenue is slowing, their earnings are slowing. Of course, headline news doesn't look at that. They look at quarter to quarter. But you're seeing a decline in this money. And I think it's also the other side of this is you're seeing some major numbers being committed to spend this year on AI. And Mark and I were talking about this earlier. Well, okay, so I'm going to spend 100 billion. When do I get my return on that? Or do I ever get a return on that? And I think that is the other thing that's being ignored is it's going to benefit probably one, two, I doubt three chip makers. But everybody else in who's buying it from those two companies, Broadcom and Netflix, or not Netflix, Nvidia, have to eventually recoup that. They have to monetize that. They got to make that money back. And I just look at it and I go, maybe 2028, maybe 2030, they start even on this stuff. So how does that CapEx spending and weight, how does that affect their earnings going forward? And is that the third quarter catalyst that lights this thing up and says, okay, these guys aren't making any more, they're spending more money than they're making. And the market, of course, thinks very short term. The market reacts to that.
You saw the same thing when Facebook changed the Meta and they put all that money into the metaverse. And you saw their
Absolutely.
CapEx go up and you saw their revenue or their earnings go down and their stock followed that too. They just
Yeah.
Mark Zuckerberg had to come back and say, we're not going to spend that much on that anymore. We're not seeing it on the other side.
Yeah. And I think that's as we go through this process of risk management, we have to anticipate Microsoft's going to have a slowing in earnings, a slowing in revenue. All of these companies who have committed these kind of billions of dollars, the payout is down the road. Maybe Kerry is right. It is 2028. Maybe it's 2030 that we reap this. Just as Mark pointed out with Meta, they committed 10 billion to the metaverse. They took a dive in their stock price. Well, now their stock price is rages. So I think that as we work through this kind of stuff, maybe the question then is what companies 3 years ago had a major CapEx spending spree increase, and are they starting to see that increase in revenue and increase in earnings per share and profitability start to come to fruition? And maybe that's how we screen out stocks going, for the near future.
Yep.
I just think there's just an enormous amount of overhype on one little sector. And I've seen this, we saw this with the housing market, we saw this with .com. Mark, you've seen it with other periods of time. And I just look at the hype level. This is like, if the housing market was 150%, this is 300 to 400%.
Well, it goes back to what Bob's question to me was that the Magnificent Seven now account for 33% of global market value compared with about 20% 2 years ago. So as go the Mag 7 will go the market.
Was it Apple
unless those other 493 can significantly all because of their small market increase their revenue and their earnings to offset it if it ever drops.
I think there's incredible buying opportunity down the road in these companies, but I think because so much sits on on basically 10 companies, 10 companies' shoulders. You gotta be prepared because somebody else is gonna pay. I mean, Philip Morris, I mean, cigarettes. I mean, really? Maybe that's
Yeah.
where the world, it's like a friend of mine who owns a Budweiser distributor said to me, we don't have recessions. We just have spikes in our revenue during recessions.
Yeah.
And so it's, as he said to me, he says that when we go into a recession, it's God, cable TV, and alcohol that do well.
And pizza.
And
Yeah.
and he's right. You see more people show up at church. You see more people. The last thing they're going to do is cut their cable bill because it's now their full-time entertainment, and they're going to drink more because they're depressed. So that's a sad state of affairs, but that's how it works.
Yep.
So
Well,
anyhow.
unless anyone has anything else, I'm done with my rave.
All right,
for
thanks,
today.
Mark and Trent. Appreciate it.
Yeah, thanks, Bob. Nice questions. Anyone else?
Thanks, guys.
No, thanks a lot. This is my first time here, guys, and I'm just checking you out. Steve,
No, what's your name?
I can't get
Steve?
my video on for some reason,
Oh, okay.
Oh,
but thanks a lot.
Well, it's
All right.
hopefully it helps, and you can always ask questions. Trent has an office in the Discord, and so do I. So we're available during the week. So
Okay, well, thanks a
feel
lot.
free to ask questions, and we'll help you out. So we appreciate everybody who comes on these calls. We appreciate everybody in the Platinum channel. Utilize what we do. Make some suggestions if we want something else that we can do for you. We'll look into it. Can't promise anything, but Trent and I work hard to try to provide you guys with information that maybe you can't find anywhere else, and different view of things from 2Regular guy point of view, which you guys are all regular guys and gals too. So we've got really good people on this Discord and Discord live, Platinum Live. Hop on there once in a while if you see someone in there, and they're always willing to help or answer a question or direct you. So utilize the resources, and everyone have a good weekend. Might see you at 3:00 on Kerry's call. Other than that, I'm done. Anything else, Trent?
I'm done. I'm good.
All right, lunchtime.
All right.
All right, guys.
See y'all later.
Thank you.
See ya.
See ya.
All right. Bye.